Hi everyone, today we're talking about Align Technology stock, which is my new company that I've invested in. I said previously on my last video I was looking to buy into a new company and I had bought shares in a new company, and today is the kind of big reveal, and I bought shares in Align Technology stock. And I got in what I feel like was a good entry point. It's gone slightly down since then. I invested in Wednesdays when I bought my Align Technology shares at $211.10, and it has pulled back slightly since then, but still, I feel like at this entry point, there's still quite a bit of an upside, and I have already got the stock on a bit of a discount, which I'm happy about. Now, if you don't know what Align Technology stock is, it's pretty much just an orthodontics company, and they produce 3D scanners and clear aligners, which is kind of what they're mostly known for. Now, this is actually a company that I've been tracking for about 3 years, and it's basically since a company that I've been tracking since I invested into the stock market. And it's one of those that I've just kind of watched for so long, and it's just been going up and up and up. And I thought, right, it's a company I'm never going to invest in, but I just kind of like seeing what's going on in the company, and if anything happens, maybe there's a chance to invest. And that kind of happens really. And when we actually look at the stock chart itself, we can see how much of a big gain that this stock has actually been on. And back at its peak at around September 28th of September 2018, we can see this stock actually touched the $391 mark, nearly pushing the $400 mark up there. That's its highs. And then we had a big massive slump in the stock, and since then we kind of had a little bit of a rise again, and that kind of peaked out at $331. And then we had earnings and a little bit of a downwards movement, and then earnings, which then absolutely took the stock down 20%. But you can see that it's just on a massive discount right now, and it's been on a massive gain since it IPO'd back in 2014. And to that 2014, to that September mark, the stock was up 623%, which is crazy. And now we're down at about a 50% discount since them highs back in September 2018. But obviously the earnings was a big thing which took the stock down massive. And since then, since that 52-week high back in September 2018, or its all-time high, should I say, we have had the stock pretty much half then. So the stock has been down on a 40% drop since May. And the scary thing is when we look at the actual position, everyone since October 2018 has actually been down on this position huge. And obviously the earnings took it down, and when you do have a growth stock like this, the stocks can generally fall quite hard, and that's what's kind of happened with Align. It's always been known as a growth stock, and when a growth stock kind of comes out with the earnings that it has done, investors don't like that when they're a growth company and saying the guidance is getting cut, and that's kind of what really affected the stock overall. But when we actually look into the earnings itself, it was actually pretty good earnings. Now the EPS growth was 40% in earnings year over year. The revenue was 22.5% year over year. And the negatives that were really taken from the earnings is that there was a lot more competition going forward, and also the China problems, which kind of like every stock, every stock you kind of invest in has said something about China recently. But when we looked into the earnings call going forward, I had a listen to the earnings call before I actually invested into the company, and it was saying that customers were returning to the company and buying their aligners once again, saying that they were the better brand and they had the better results from them, which is really good to hear. So it says that July looks like it's returning some of its business back again, and I feel like there was a little bit of sandbagging with the guidance that was put out. So I would expect Align stock to really beat these numbers that they put out, which was obviously the guidance cut which put the stock down in the first place. So going forward, we've obviously talked about the earnings there and why the stock is down. Obviously, even in the earnings, we could see that strong year-to-year growth overall, and we could see that the kind of problems that were put out there are starting to resolve themselves. Now, as an investor, what I kind of look at is I'm looking at a company and I'm kind of seeing not what's happening in the company and what's going to happen in the company going forward. So all that's kind of being priced into the stock now, and I feel like the company can still go on from here and recover quite a bit, and that's why I invested into the company. And also there was a few positives from the earnings anyway. Now, a couple of positives why I did invest into the stock is, first of all, after the earnings, we had a new announcement of share buyback happening, which is pretty good. That was something around 200 million share back program, which has already been added on top of the 400 buyback program that's been out since I think it was May 2018. So we've got nearly about a 600 million share back buyback program going on right now for Align stock, which is obviously going to put the price of the stock upwards. Now, obviously, as an investor, and when you see a company buying back their shares, it kind of signals to me, and I think other people as well, that if a company is buying its own shares back right there, it kind of senses that its stock is massively discounted right now, and it's at a bargain price, and that's always a good thing to see as an investor. Second thing is that also I think that the company itself is a great company and a great brand, and that's why we're seeing other people, you're always going to have that kind of thing where people are going to try competitors if they're cheaper, and that's what the CEO was saying in the conference call, is that some of these prices the competitors were doing were insanely cheap and they cannot match their prices. But at the same time, they were not getting the quality of the product, and that's why they're seeing the customers come back. So I think that's just kind of a temporary thing, and that's kind of already been priced into the stock. So when I'm investing in a company, I do like to kind of get the best company in that sector, and I feel like Align Technology is a great company in that sector going forward. Another point which I really impressed by Align Technology is the balance sheet is phenomenal. Like, I obviously invested into Johnson & Johnson and Walgreens, which I kind of, when I invested into this company, I was like, I don't know if I want to invest into Align Technology because I've kind of got exposure in the healthcare area with Walgreens and Johnson & Johnson. But Align Technology is kind of in a different sector, in that healthcare sector. I do kind of feel like I might just rebalance slightly with them three stocks, and maybe one might go at some point this year, just so I'm not too heavy in the health sector. But Align Technology has a phenomenal balance sheet. There's zero debt on there. There's so much cash on there. It's a company that could potentially look at paying a dividend at some point in the future. It doesn't need to really right now because it just has so much growth on the revenue and EPS side of it, but it has no debt. And when we look at Walgreens and Johnson & Johnson, which are another two companies that I own, they do have debt on their balance sheet. So to have a growth company like this that is doing this amount of profit and having such a good balance sheet is something that you don't get every day. And going forward, when we look at the stock, it's still going to have great EPS and revenue growth. The EPS side of it is going to be 24.5%, and that's what we're predicting, not for this year, but from the growth in 2 years' time. And sales is 20.8%, which is still really good double-digit growth. When I'm investing in a company, I don't want to see what a company's kind of doing right now. I want to see what the revenue and EPS is going to be in 2 years' time, and that will kind of give me an idea of where the stock price is going to go for that stock. Now, overall, why I invested in Align Technology stock is because I saw this massive discount, which I didn't really expect to see. And it kind of got attractive to me right now at these prices. Now, obviously, the PE is still slightly high, but it's not incredibly high compared to its PE history. And when you look at the amount of growth that you're going to have in this company, we're talking 20% growth. To be at a kind of like 38, 40 PE, that's pretty good really, because a lot of the companies that are kind of at 20% growth are kind of around the PEs of that, or maybe even slightly higher. So that kind of doesn't bother me too much about the PE being just slightly high because of the amount of growth that you do have in this company going forward. So my kind of prediction with this stock is that when I invest in this company, I'll be honest, I kind of saw a 30% upside, and whenever I invest in a company, I like to see like a 30% upside in that company. And that's why I would invest into it. So for this year, I do see that the stock could go up 30%. And when I look, 2 years down the line towards the end of 2020, I could even see this stock being going up 60%. So overall, I kind of I'm not exactly sure where I would sell it. If the stock was to jump up absolutely huge in the next kind of month, 2 months, and it went up 30%, I might be tempted to sell. If it doesn't, I might be tempted to hold it for 2 years down the line and hold it for that 60% gain. That's kind of where I see myself kind of holding this stock. So I do see kind of a big, massive upside in this company, and that's why I invest into it. And I do like a discount, and Align had a massive discount, which is what attracted me to invest in it in the first place. But I'm really happy with this purchase. I feel like if the stock was to go down even more, I could add a few more shares into it, because I do really like Align Technology stock. It's a great company, so it's a company that I'm not scared to add in, and I even kind of, a part of me slightly hopes the stock would go down, so I could buy the stock for a little bit cheaper and get a bigger position. So we'll see what happens. But I was really happy with this investment. One of the best investments I think I've made for quite a while. So we'll see how it does, and obviously I'll make the portfolio review so you can track how it goes on in the coming months. Guys, that's me talking about my new position today, Align Technology stock. I hope it helped you. I hope you enjoyed the video. If you could give the video a like, subscribe. Thanks for all the support recently. It's been absolutely amazing, and I'll see you on the next video.